Hi members and welcome to another Macro Monday. My name is Mitchell Sneddon and today I'm actually joined by Eureka Report editor Tony Kaye. Callum, our usual economist, is on holidays at the moment, but the economy never sleeps. And so today, Tony, we'll be taking a look at some of the key macro data coming out this week. What are you anticipating?
Well, it's going to be a fairly quiet week. There's not a lot of data out. The US is closed on Thursday for Thanksgiving. So that will dictate the trend largely. Probably the most interesting piece of data coming out will be on Wednesday when the US Federal Reserve releases its policy minutes. And we'll be looking to those just to get a bit more of an idea as to what's going to be happening with interest rates. Expectations are still high that they'll raise interest rates next month, and that will certainly dictate the flow across the globe in terms of interest rates. We've already seen that bond yields have been rising. They're at a 7-month high, and we expect that there will be a continuing trend in terms of bond yields rising.
And it's interesting to note that last time we sat here with Callum, we were talking about the what-if scenario of a Clinton presidency or a Trump presidency, and he mentioned that if it was a Trump one, we'd probably see the Fed hold off raising interest rates because it seemed to be a fairly destabilising effect on the market, but we've actually seen quite the opposite.
Yeah, absolutely. We saw last week that the Fed Chair Janet Yellen is pretty much sticking to her guns on interest rates, quite the contrary of what we were expecting with the Trump regime. So there's potentially no love lost between Donald Trump and Janet Yellen at the moment.
So Tony, back to this week. What other key bits of data are you looking for here at home here?
Yeah, there's a bit of data out on the local market. So today we've got the Commonwealth Bank releasing its business sales index, and that tracks credit card and debit card spending. So it'll give a good indication of what the retail spending habits are of consumers. And then that flows through into tomorrow. We've got the ANZ releasing its consumer confidence index, and we expect that will still show fairly healthy trends in terms of consumer spending across the retail sector. Later in the week, we've got some data out on construction work completed, and that will cover both commercial and residential. So there should be some interesting trends there that we can extrapolate in terms of construction activity across Australia, particularly as there's question marks over, particularly in the residential sector, about apartment construction. And we know that in Melbourne in particular there's a surge in construction activity in the inner city area, and to the extent that many see that as a problem looking forward in terms of having surplus property on the market, which is going to pressure property prices in that segment.
Excellent. And will any of these turn into articles down the track for our readers?
Oh, absolutely. We have a regular column already written, and the readers may have seen the piece that Nerida Conisbee from the REA Group wrote last week about whether you should buy a CBD apartment. It was quite interesting because Sydney and Melbourne, we know, are problem areas. Other parts of Australia are also under pressure in certain areas. And but interestingly, Nerida said that there is still the opportunity to buy inner city apartments. I guess if they meet the right criteria, they've got to tick all the boxes really.
Excellent. Well, Tony, thanks for filling in for Callum. And members, we'll catch you next week with another Macro Monday.